People make this costly mistake. Many beginners think that your monthly profit from a rental property is that, for example, you just take your rent income of say $2,000 and subtract out your mortgage amount of $1,000, and there you go. Now you've got $1,000 of passive income left over. That number is also known as positive cash flow. Let's debunk that myth, and then I'll tell you how to find your cash-on-cash return and why this is crucially important if you're ever going to be a successful real estate investor. Hi, I'm Keith Weinhold, the Get Rich Education founder, Forbes Real Estate Council member, and longtime real estate investor here in the next video of our Explained series. All right, if your rent income is $2,000, in addition to subtracting out your aforementioned mortgage principal and interest payment of $1,000, you must also subtract out what are known as your set of operating expenses. So let's do this. We're going to watch what some think of as their $1,000 of residual cash flow drop down to what will be a realistic real world number. Use the acronym VIMTUM, VIMTUM, to help make these 6 main operating expenses easy for you to remember. Not what we're going to call here your blue single family rental property. V is for vacancy. If your income property is vacant 5% of the time, then deduct out 5% from your $2,000 rent income, which is $100. Insurance is I, say it's $200 a month. M is maintenance, $150 a month. And I'm just estimating here. Of course, your real figures are going to depend on your real property. T is for taxes. Your property taxes, $150 a month. U is utilities. It's 0 in this case because this is a single family rental home. That's where the tenant typically pays the utilities. M is for management. If you self-manage, it's 0. If you have professional property management, that's often 10% of your rent amount. So let's average that and use 5%, then $100 as your ongoing monthly management expense. All right, now that you can see all the common recurring expenses, we can figure out your cash flow. All right, it's $2,000 rent income minus $1,000 of mortgage principal and interest minus its $700 of those VIMTUM operating expenses, and you got $300 of monthly cash flow. That's what that's called. And this cash flow is specific to your one individual rental property. In the second video of our Explained series here, we calculated your overall personal cash flow, one ingredient of which was an income property of yours, just like this one here. So let's get back to your cash-on-cash return, which pertains specifically to this one property we're discussing. And you know, the nice thing about real estate math is that you can do this on a napkin. It is just addition, subtraction, multiplication, and division. It is simple stuff. It's just knowing which formula to use. I have never had to use calculus or trigonometry or exponents in doing real estate math, not once. So speaking of simplicity, here it is, the cash-on-cash return formula. It's your initial cash flow divided by the cash that you put into the deal. All right, well, we already know your monthly cash flow is $300. Annualized then it's $3,600. There's your numerator. Say that your down payment and closing costs on this property were $50K. That might be 25% of a $200K property purchase price. Your cash-on-cash return then is 7.2%. All right, now that's probably higher than what you're going to find on most properties today, by the way. Now, the phrasing of that term, cash-on-cash return, etymologically, that confused me the first few times I heard it 2 decades ago. But rather than overthinking it, it's simply the cash, not equity growth, but the liquid component, the cash that you get out of the property every month divided by the initial cash that you put into the property on the closing table at the time of purchase. Cash on cash return. Well, what figure is an acceptable cash-on-cash return? That's up to you, but understand, even a 1% figure might be enough because, as you might already know from watching here, the cash-on-cash return is one of just 5 ways that you can expect to be paid simultaneously with real estate investing. Stay here, I've got another simple explanation in our Explain series videos next. You can watch this one next.